Welcome to Keeping It Real. I'm David Grossman. It's great to be back here. It's a new year, new things, new beginnings, New Year's resolutions. We all have them. It's great to be back here at the kiosk at our studio at Dufferin & Steeles. I have to tell you, we will be moving soon. I spent the entire day yesterday walking around downtown looking for locations. I'll tell you who we've got here, first of all, because I'm sure you're curious. We have David Franklin is with us at the table. He's the chairman and chief legal counsel from U.S. Property Shop, Inc. And, you know, everybody's thinking about U.S. real estate nowadays. They have been for some time because it's taken a much bigger dip. Well, I mean, it took a dip. I mean, Canada was, well, some parts of Canada had a dip, but there's a lot of opportunities and a lot of people are asking questions. Personally, I'd love to move south. David, I've had enough of these winters. I'm 47, but you know what? It's enough. I was downtown walking around yesterday. I have my boots and my hat. I'm looking for locations to move our kiosk. I want to be out in the public domain. We're here in a industrial unit. I want to be out in the public. It was cold, but you know, if you dress properly, and after this many winters, I have learned to dress properly when outside, it's not so bad. But nonetheless, I'm ready to move to Arizona, to Florida. So whatever you've got for us today, I want to hear about it. Also coming up a little bit later on the show, Gary Nuska is back from ICIWorld.net. We're going to talk. He's got a tip. He always has at least one tip for the real estate agents, and he's brought with him a good friend, an experienced mortgage broker named Dave Sohal from Centum SRF Financial. He specializes in private financing. So we're going to get the inside track on private financing today as well. David, thank you very much for being here. Please tell us, what is all the fuss about U.S. real estate?
What's happening is we found that people on the East Coast, Toronto, Montreal, they're looking for second homes and investments in the Florida area. We find that people out west, Calgary, Vancouver, they're going down to Arizona primarily for their investments and also for a second home. I
see. Okay, so depending on, I wonder why that is. So depending on where you live, you're looking to Arizona or Florida.
Yes. And the reason is, I just got back from Florida, by the way. I was just down there playing golf.
Okay. That would explain the suntan. Yes.
You've got it. So I was in the Miami Beach area, and actually at Aventura, I play golf at Turnkey Golf and Country Club. And so we spent a couple of weeks down there having a fabulous time. The weather's perfect. And the nice thing is the flight from Toronto is about 3 hours.
Yes.
That's it.
Okay.
And the same thing for the people out west to fly from Calgary, Edmonton, Vancouver to Phoenix is about 3 hours, 2 to 3 hours as well. So it's easy. For us to go to Phoenix takes about 5 hours.
Right. Interesting. So that couple of hours on the plane can make all that much difference.
Yes.
I've also heard that people like to be aligned with their own time zone.
Yes, that's the other part. There's no change.
Right. Yeah.
And so what's happened is, because the Canadian dollar went up, we're basically at par today is about $1.01. It used to be 60 cents our dollar.
Yes.
So now when you buy down the States for either second home or for investment property, you're paying dollar for dollar basically.
Right.
Which, so before, when you were 60 cents on the dollar, you're talking a hell of a premium you had to pay to buy an American property.
Right.
Also, shopping now is easy because it's basically dollar for dollar. And when you go down there, the sales tax in Florida is 7% instead of paying the 13% here.
Right.
So it's cheaper to shop down there.
Yes.
And so now people are looking from Toronto, Montreal to go down there either to buy a second home because it's much cheaper or for investment. And the same thing is happening out west.
Right.
And as a result of the Canadians are the biggest foreign buyers of residential property in the States. We are the biggest buyers. And Florida is the #1 spot for Canadians because our population is on the East Coast.
Right, right.
So we're the biggest buyers in Florida.
Okay, we've got a few slides that we want to look at. And the first one here talks about, like, there's a series of slides that show a picture of the United States. and there's some different colors on it. Some are red, some are green. So the basic, and it shows a pattern over a number of years. And I guess the idea being that this can tell us how bad it's gotten, how when prices were at their bottom, and now that they are recovering. And so I guess now is the time. That's the conclusion that I drew. But let's take a look at some of the pictures here. We can see what starting in 2004, David. What does this tell us here, basically?
Okay, this map or sorry, outlay is from the Federal Reserve Bank of New York.
Okay.
And in the States, they have the Federal Reserve Bank system. There's 8 central banks. There's 8 banks. This is the main one, Federal Reserve Bank in New York. And they did these slides for showing what is happening in the residential real estate market in the States.
Okay.
Now, the areas that are in green are price increases.
Okay.
The places in red are price decreases.
Right.
And the whites are no change.
Okay, so we could see here that in 2004, on the West Coast and on the East Coast, especially in Florida, we were in a strong price increase. There's a deep shade of green.
That's it.
And still in 2005, but maybe it's getting a little bit...
It's getting darker. The prices started going up even more. If you see on the top right part, just above the line of colors,
yes,
you'll see the price increase. What does it say the price increase was that year?
The dark line of colors.
You see the dark line?
17, approximately 17%.
So the prices in residential went up 17% that year.
Okay, gotcha. And then in 2006,
take a look what happened.
It's about a 4% increase overall, but the color is not as dark. So it's, yeah, okay. But still in the same areas, out west and Florida. And now in October 2007, we have a change.
Dramatic change. Look at the reds coming in. And the areas that were primarily green, they've all turned red.
Right. Okay. So now we're into a decrease mode. 7% is the average, or 6% is the average. And then October 2008, it gets worse.
Much worse.
15% average decline. But in these particular pockets, the color is deeper, so the decline is probably it's above the 20% range if we're talking about out west.
That's right.
And Florida.
Yes.
So it's a very deep decline. Continues in 2009, and in 2010 we start to see a change.
That's right.
And the change is continuing, and then 2012.
Look what happened. It's going back to green.
So we really, it appears that the trend is now changing.
And the prices went up 5.2%.
5.2%, right. So it's anticipated that this may continue.
Not only may continue, what happened is the reason you have the dark greens and the reds in those areas primarily,
yes,
is because those are the areas where you have in-migration, but also second homes being purchased.
Right.
So what happened in those areas, the builders were building in anticipation of the retirees, the baby boomers, moving into those areas. So you see California, Arizona, Nevada, and Florida. Because you've got about 80 million baby boomers in the States. Now, they did a survey, and they found about 28% of them want to move to another state, which is primarily down south, because the cost of living is less.
Right.
So we know that the baby boomers are coming in, and so and the northern baby boomers, there's 34.5 million baby boomers living in the northern part of the United States. So they want to come down south. And that's why you had those big increases before, because in addition to people moving, you had the baby boomers buying second homes.
Okay, so this slide tells us that in 2012 there was a 5% increase, which is just clear that the trend is reversing. But it's compared to some of the decreases we have, it's not that much. So it's still just the beginning of this new cycle. And we wanted to talk specifically about Florida and Arizona. We were also going to want to talk about Atlanta, but Florida and Arizona, What's the story in Florida and Arizona?
What's happened in both places, prices in Arizona and Phoenix area are up 35%.
They're up 35%?
Up 35%, and they're building new homes there.
Wow.
And they expect construction starts to increase by 50% over last year this year. And 67% of the new projects are sold out in less than a year. I met a developer there who's being financed by the banks, the new projects, and every month he's raising his prices on his subdivisions.
Wow.
So you've got people moving in because jobs are being created in Arizona and the Phoenix area. Intel's spending over $1 billion on a new plant in Chandler, just south of Phoenix. It'll be bringing in about 6,000 new employees. And so the companies are moving out of California because of the problems there and the high taxes coming to Arizona.
Wow.
And then you've got the baby boomers buying homes there, and also the Canadians. So you got, on top of immigration, you've got the baby boomers buying second homes as well.
Right.
So there's your extra demand. And in the Miami area, prices are up over 8%. And what happened there is Miami is an international city.
Mm-hmm.
And the buyers that came in and cleaned up all the properties on the water on the Miami beach side were the Brazilians. Their currency jumped dramatically.
Right.
It was actually cheaper for a Brazilian to buy in Miami than it was in Brazil.
Wow, that's amazing. And what about Atlanta?
Now what happened is Atlanta did not drop as much as the other cities because there's not second homes there. You're not going to retire. What happened is Fitch, the rating agency, has said that that is a good place to invest. And this is from the rating agency because of job growth and employment growth and immigration.
Right.
They're expecting over the next 5 years an increase in the population of about 470,000.
What's the climate like in Atlanta?
It's warm and humid.
Okay, so it's not Florida, but it's not Toronto either.
That's right.
Okay.
But you're not going to go there for a second home.
Right.
Okay? You're not going to live in that area, so you go down to Florida as opposed to Atlanta.
But maybe for business, it could be.
And remember, Atlanta is the busiest airport in the United States.
Okay, very interesting. There were some stats comparing ownership and renting in Miami, Phoenix, and Atlanta.
Yes.
What's the story there?
It is cheaper now in the States, in most areas, especially the hard-hit ones, to own, it's cheaper to own than to rent.
That's unusual.
That's correct, especially from the Canadian side. What I worked out was a person paying, and take a look at the slide.
Yeah.
In Miami, it's 48% cheaper to own by $971 a month.
Wow, these are pretty significant numbers.
Yes. And in Phoenix, it's 49% cheaper to own by $598. In Atlanta, 57% cheaper to own than rent by $767.
So it looks like good investment opportunities, in addition to being able to, for your own retirement or for your own second home, good investment opportunities because of the rental incomes.
And what I worked out was a person in the States paying $1,000 a month rent, assuming interest rates are 5%, they're not that in the States today, they're around 4%. That person, for the $1,000 a month, could afford a $150,000 mortgage.
Right.
You can buy that house that rents for $1,000 a month for about $100,000, give or take. So that means as an investor, if you're buying for $100,000, you know your tenant can afford to pay you $150,000 for that house. And that's only 3.5% down. That's all they require.
Really?
Because we have CMHC financing, there they have Fannie Mae and Freddie Mac.
Yeah.
They do the same thing. They're all insured.
So with that, what kind of down payment do you need?
3.5%.
To buy a house in the U.S.?
Yeah.
3.5%?
That's it, with the insured mortgage.
Wow, I had no idea.
Plus, the Americans are born again all the time. In Canada, once you own a house, you can't go back and become a first-time home buyer.
Right.
In the States, if you haven't owned a home for 3 years, you become a first-time home buyer again.
Hallelujah! I'm reborn.
So now, as an investor, you know that your tenant can afford to pay you $150,000.
Mm-hmm.
By an equivalent statistic, as a Canadian paying $1,000 a month rent with the same 5% mortgage,
right,
he can afford a $140,000 mortgage. So in other words, the person in the States can afford to pay more. Also, they get to write off their interest and property taxes. So by paying $1,000 a month and having $150,000 mortgage, because he can write off property tax and his interest payments, he's in for about $885 a month.
So why aren't more people buying?
They are buying. And what happened is the hedge funds, Wall Street got into the marketplace. The reason what's happening now is Blackstone is the largest one. They raised $13.3 billion. They're going in to now buy single-family homes. They buy them, renovate them, rent them out, and they're going to hold them. And there are other hedge funds as well. Their whole play is to go in and buy thousands of homes, and then, because they're all getting positive cash flow, and what happens is they're looking at about a 6 to 7% return on their investment, waiting for the appreciation. Now the whole play for them will be to make it into a REIT. So they're getting 6, 7% return. They know that when they make it into a REIT, when the market comes back, they can probably double the price because offer the public 3%.
Right.
So they're all buying.
So they see big opportunities. Now the other thing is that the price of these homes. I mean, if you're living in a city like Toronto, I mean, you can't do anything for less than $400,000 or $500,000.
That's right.
But some of these homes are like we have a picture of a home here in Atlanta. Nice family home, $75,000.
That's right. And look at the size of it. And it's $44 a foot. And you buy that, it rents for about $975. You're making 11% return on your $75,000.
I might just move there. Forget about the rent.
And if you take a look at now, so that's 11%. And the reason Atlanta has that return is the appreciation is not going to be as great as it will be for Florida and Arizona.
Right.
Okay? Right. Now, you have another slide for, this is a condominium in Phoenix area, Mesa.
1 bedroom, 1 bath. So this is a basic unit, 687 square feet. Well, I mean, still $59,000. I mean, you can't move for $59,000 in Toronto.
It's 8.25%.
That's very good.
And then the next one is for Tamarack, which is the Miami area.
$87,000. 2 bedroom, 2 bath. This is a condo?
Yes, it is.
Well, it looks pretty good. It looks like a great opportunity.
And what's happened is you'll see that in the Florida, Arizona area today, you're going to buy around 6 to 8% return.
Yeah.
And in the Atlanta area, around a 10% return. The reason for the difference is people expect that the price increase will be faster and more in the Florida, Arizona, than it will be in Atlanta. So you're getting a higher return while you're holding in the Atlanta area.
Right.
And the other thing is, as a Canadian, you've got a problem. You can't go buy a house and renovate it yourself because you need a work permit.
Right.
So what happens is, in order to buy there, you really need what we call a turnkey. There are people down there, companies, they go in, they go to the auctions, they buy at the auction, they renovate it, they put the tenant in, and they have property management, and they sell that as an investment to...
I see.
And your competition is the South Americans. So you've got South Americans buying, you've got Europeans buying, and you've got Canadians buying. And the whole thing is now, because the hedge funds are in, prices are moving up. And in Atlanta, what happens is, the first Tuesday of every month, it's auction day at the courthouse. And what's happening there is the hedge funds show up with suitcases full of cashier's checks in $1,000 denominations, $5,000 and $10,000. The reason is you pay cash for the house. And you got to have the cash sitting there. In Arizona, they do the auctions every day. And if you want to bid on a house, you put $10,000 down as a deposit to bid. If you're successful, you close the next day.
So is that the service that your company will provide for people? Like how do people, if they don't want to fly down and go to the auction?
Well, that's difficult because the other problem is if you go buy at the auction, you buy as is, where is.
Right.
So now you've got to do all your due diligence before. So you would have to go check the house, check what the cost of renovations are, know what the rent's going to be. You have to check the title. You have to check the property taxes because that's a lien ahead of you. So all that has to be done before you buy. Now, after you bought, if you do it yourself, now you got to hire a contractor to go renovate it for you. And then you got to rent it out. What we do is we work with the people that have the capital, that go in, buy them, renovate them, tenant them, and have the management.
Okay.
So you know before you start what you're buying and here's your return.
Okay, so you take care of all that, and if somebody wants to move into it themselves, if they don't want a tenant, you'll do that too, right? You'll just get the place for them and clean it up if it needs to be.
We don't. We have people down there.
You have people that so
Right.
people can come to you for a turnkey solution.
That's it.
And the website is ownusa.ca. And I
Right.
know you do, frequently you have seminars.
Yes.
So people can find out more through the website and attend the seminar
Yes.
and get their U.S. property.
And what happened was we wrote a book called Buying U.S. Real Estate.
Yeah, you can hold it up to this camera. Yeah.
And this book was written by myself on the legal aspects primarily.
Yes, right.
And Don Campbell, who is the founder of RAIN, the Real Estate Investment Network, which has about 2,500 members. And they educate people about buying residential real estate.
Right.
And Richard Dolden, he's the president of RAIN. And this book, the foreword to the book, was written by Ambassador Frederick Bush.
Yes, okay.
And endorsements for the book came from Rod Page, who was Secretary of Education of the United States from 2001.
Yes, we can't see your face.
Oh, I'm sorry.
Put it down. Okay, there you are. Okay.
From 2001 to 2005.
Yes.
By Prime Minister Brian Mulroney.
Okay.
Sherry Cooper.
And I see Brett Wilson as well.
Yes.
I'm just reading all the Dragon's Den's books now, so I have to get to Brett. But those guys know what they're talking about. He says this is the Bible for any Canadians want to invest in U.S. real estate. So, and I know when they go to your website, I think they're prompted right away for an opportunity to get a copy of this book. Is that right?
Yes, that's correct.
So they definitely want to go check out that website and get a copy of this book, and you can learn everything you need to know.
And I explain about the tax aspects. What I tell people very simply is when you buy down the States an investment property, don't worry about the U.S. taxes. You got to pay them. Calculate your return based on your Canadian tax rates because you get a credit for what you pay in the States and get your Canadian taxes.
Okay, well, people have to go to the seminars, pick up a copy of the book that will learn everything they need to know from your company, I'm sure. David, thank you very much for being here. I really appreciate it. It was a delight. It was good to learn all about this. Check it out, ownusa.ca. We're going to take a short break right now, and when we come back, we have Gary Nuska, regular supporter of the show from ICIWorld.net. He's brought a special guest with him, David Sohal. We're going to talk about private financing, something people need. Hang in, we'll be right back.